Well, circling back to our top story on SVB's collapse and the worldwide fallout. For more, Antonio Fatas, Professor of Economics at INSEAD, joins us now. Professor Fatas, well, there were already signs that an unravelling of SVB could happen. In fact, those emerged about 2 years ago. How did regulators miss those warning signs?
I think it's a combination of two things. One is probably poor regulation. I think regulators in the US took their eyes off, in particular, small banks. There was a sort of a relaxation of regulatory practices after sort of a change in policy a few years ago. That what it did is sort of isolated some of the smaller banks from the regulatory supervision. So first, there was clearly an error in regulation. And I think like many other times that we see a crisis, we always say the same thing. This time is different. So this was a quite unique bank, quite unique both on the depositor side, because there were sort of mostly companies, mostly uninsured deposits, which is quite rare in the US and other countries. And on the asset side, where their bets were not so much about sort of loans or mortgages, it was more about securities. And it was the rising interest rates, which has been quite unprecedented, at least in recent times, that caused this particular crisis.
Yeah, and we're seeing some significant developments over the last couple of hours. HSBC to buy the UK arm of SVB. US regulators, they're also stepping in. But still, what is the potential of more collapses, particularly, more than 5,000 regional banks in the US?
I think what we saw in the US earlier today, our time here in Singapore, which is late last night for the US, I think we saw a set of decisions which are clearly trying to stop other banks to follow the same path. I think the fact that now the FDIC has promised all depositors that they will get their money back, that's a fundamental decision. It means that if you are in a different bank, you almost have a guarantee that the same will happen to you if your bank were to fail. In addition, they're providing liquidity through the Federal Reserve to any bank, small or big. Any need for liquidity now is guaranteed. I think that provides an environment where you don't expect a lot more volatility. Now, having said that, there is always panic, and there's going to be some people who are going to play it conservatively and might move away from some small banks. That's true for investors. That's true for bank customers. So we must see for sure over the coming days some banks in trouble. But I think what you could call a systemic financial crisis is out of the question at this point.
Yeah, and so given the steps that have been taken so far, do you think Asia could, escape so relatively unscathed?
I think Asia will be isolated from these events. I cannot rule out some volatility. Again, when people talk about sentiment, when we see what happens in the US, I'm sure it will affect somehow the volatility that we see everywhere in the world. And we're seeing in the stock market in Europe, and we'll see it in other countries as well. But I think this is quite a contained crisis. It was very specific to a bank or a couple of banks in the US. And I think the measures that we've seen by regulators, by the US Federal Reserve, they're truly going in the right direction. They've gone as far as anyone would imagine. So I think that's really containing the risk to other regions. I don't expect it having any major effect here in Asia.
Professor, how much blame should lie with the US Fed with regard to its rapid rate hikes? Let's also talk about, then the central bank's role as a lender of last resort. From this incident, what message does it send to the tech industry and banks like SVB?
I don't think there's a lot to blame on the Federal Reserve. I think the Federal Reserve is doing what they're supposed to do. We deal with macroeconomic scenarios, macroeconomic conditions. Inflation was high. They needed to raise interest rates. They were always fairly transparent on how they would raise interest rates. Of course, they did change their mind as time passed because inflation surprised them, surprised all of us. So, but I think the framework that they used was always transparent. Banks should have taken care of the risk associated with increasing interest rates. Other banks did, for sure. SVB didn't. So I think the fault here lies on the bank managing risk. What the Federal Reserve did is a standard. The role that they're playing now as a lender of last resort is quite a standard as well. They typically will show up in financial crises. They show up in events like this, and that's what they did yesterday. So I don't see anything strange in the situation of the Federal Reserve. I see an unusual set of macroeconomic circumstances that have created an increase in interest rate that has been very fast. That is not ideal, but that's the type of macroeconomic situation we have to deal with. So the central banks are doing what they have to do.
Oh, many thanks for that. Antonio Fatas, there, Professor of Economics at INSEAD.